Hello, everybody. We will give just a few minutes for all the registrants to start signing in, and then I will review some of the rules and how the presentation is going to happen today. Welcome, everybody. Got a lot of new attendees today. If this is your first time, welcome. Give it about a minute before we get started. Hello, John. Nice to see you here again. Okay, so since we're starting to have people sign in, I'm going to go ahead and get started. Some things before we get into the presentation. We do have a live Q&A session at the end of the presentation today. Anand will be answering all of your questions. If you could please put your questions throughout the presentation into either the chat box or the Q&A box. If you hover towards the bottom of your screen, you'll see the icon for the chat as well as the icon for the Q&A. Nobody will be able to see your questions aside from Anand and I. And if we cannot get to everybody's questions today, as a reminder for those of you who have not attended our sessions before, we will be posting the full recording as well as the answers to the questions asked today on our website at www.ERPfixers.com next Thursday. So let's go ahead and get started. My name is Jess and I'm with ERPfixers. Today we're going to be discussing how to achieve real-time profitability using margin analysis in S/4HANA, and our presenter today is Anand Sitharaju. He is a CPA and SAP FICO consultant, and he's also the author of BA Consultants Inc. Next slide, please. What is ERPfixers? We connect you with SAP experts to obtain quality immediate solutions for your SAP system. We consist of thousands of SAP freelancers all over the world in all SAP modules who are ready to help and assist with their knowledge in SAP. We offer an online platform, a SAP optimization assessment, material ledger, S/4HANA transitional roadmap, and cost transparency report. For more information, please visit our website at ERPfixers.com. Next slide. About Anand. He is an SAP S/4HANA financial and management accounting certified consultant and a CPA. He has more than 20 years of experience in consulting. His experience includes global SAP finance and controlling transformation projects for central finance, profitability analysis, project systems, product costing, material ledger, cash applications, capital asset management, leasing, global tax, and legal reporting. He is also the author of SAP press books such as Document Splitting with SAP S/4HANA and Profit Center Accounting with SAP S/4HANA. Next slide. I'm going to hand it off to Anand now to get started with the presentation.
Thanks, Jessica. Hello, everyone. Good morning, good afternoon, good evening. Welcome to the session, Margin Analysis in S4. So I have divided this session into multiple sections. So we'll look at what is margin analysis in S4, and then we see some key differences between ECC and S4, especially with the costing-based scope on margin analysis. And then I'll get into the core subject of how to achieve real-time reporting with Attributed Profitability Segment. That is the goal of this session, is to cover that as much as we can in this session. I'll also plan to do a demo in the system, so you would see all the action, especially with that feature. And then at the end, I would like to walk you through the limitations of Attributed Profitability Segment and what you can do, what you cannot do. And then at the end, I'll show some key takeaways or best practices out of the session. And also I will provide some good useful links and also SAP notes. You could leverage them when you use this functionality within your company. So that's my agenda here. I expect this agenda to go almost full hour. And we will take questions at the end. If I cannot get to the questions, I have given my email ID at the end. You can reach me out and we can circle back with any additional questions you may have. So with that, what I'll do is I'll go to the next slide. Okay, question to the participants. So how many of you are using margin analysis in S4 system? Can you please raise your hand so I can get a feel of the knowledge base on the audience? Go ahead, I'll give 20 seconds to answer your questions. On the chat, you can click on the raise hand so I can see the count. Okay, so I see 4, 5, 4. Great. So it looks like most of you are in ECC world, not in S4, it seems. But the session that I have is going to cover that partially. So you'll learn something out of this session. That's great to know. Thanks for the response. So let's move on to the next slide. So what is margin analysis in S4? So the margin analysis is a sub-component within controlling in S4, and it provides a contribution margin reporting on individual market segment, which helps management to make decisions at the end of the day. You want to look at your sales figures, you want to look at your gross margin, you would like to look at some sales deductions, how much discounts, what is my product cost, what is my variances out of manufacturing costing. So you would like to see all that information, you would use the margin analysis tool. It's a multi-dimensional tool. You can do dynamic sorting and rearrange data, so like slice and dice. So you can get multiple perspectives and views of a single report. And as you know, those who are familiar with the accounting concepts, there are different methods you do accounting, right? You have standard costing, you have full absorption costing, and you have period accounting, and then you have cost of sales. Most relevant to the COPA profitability analysis or margin analysis is this period accounting and cost of sales approach. Period accounting, essentially, it's a financial accounting approach and also profit center account using period of time. Like you look at all the GL accounts, end of the month, you can look at analyze your revenue and profit, and also cost involved with the sales. All this you can do through periodic accounting. Whereas cost of sales approach, it is merely a cost accounting procedure. It uses within the management accounting. It uses cost of sales like areas of marketing, product research, product development. So you create functional areas and then you use that approach, mostly used in the cost-based COPA. And then how to analyze profit revenue within S4. There are two tools available within S4. One is the profit center accounting, and then the other one is the margin analysis tool, the one we are discussing here. So the key differences between these two, I would like to lay out. The profit center accounting uses profit centers as a master data, and then you also have profit center groups. And then along with that, you will use GL accounts to get your profitability analysis on the profit center accounting. Whereas on the margin analysis, you would use characteristics, you would use GL accounts and characteristic values and value fields. So these are the things you would use under a margin analysis. So I want to highlight one thing. The margin analysis is a new name given to S/4HANA COPA. There are two types of COPA available. I'm going to walk you through that differences in the next slide. But margin analysis is much robust. It has more features than even account-based COPA. So you might wonder, okay, isn't it this account-based COPA? Well, it is built on the account-based COPA. Let me go to the next slide. So it is built based on account-based COPA. It lays out the foundation for margin analysis, but you are reusing most of the well-proven functionalities within the account-based COPA as well as costing-based COPA, right? Such as, for example, operating concern, defining characteristics, the posting logic of profitability segment, and there is also a powerful derivation tool. All these tools are already existing. We are not seeing any new tools available, but the margin analysis uses these well-proven tools to do margin analysis. And one big thing you would see with margin analysis is it's a universal journal that field catalog we will be leveraging. So you get all the currencies that are involved in the financial accounting. You can use those currencies to report on the margin analysis. And there are incoming sales orders posted in the financial accounting using predictive ledger. This feature is something we are lacking in the earlier versions, but it has been now available within S4. And then COGS split and variance split, these two features also been added. So naturally, at the end of the day, you might ask, okay, is there a need for cost-based COPA in S4? So naturally, the answer is no. You would naturally implement account margin analysis, also account-based COPA. But keep in mind, margin analysis is much more robust than account-based COPA. Account-based COPA was there in the earlier version, but it has been enhanced over a period of time. It has been improved a lot. So you will see much more robust functionality in the margin analysis. One key thing I would like to mention here is the real-time profitability analysis with attributed profitability segment functionality. What is this attributed profitability attribution? It's nothing but attributes, right? You want to derive attributes at the time of posting. So that's a key thing that I'll be talking over in the next few slides and also doing a demo. So COPA is a vast area, has a lot of things in it, right? You can do, it's a robust tool within SAP. But what the focus of this session, what I can cover within this 1 hour session is on the profitability analysis on the attributes that you can derive. And I'm not going to cover other areas of COPA because like I said, it requires several hours to go through each topic. All right, so moving on, let's understand, I need to lay out some fundamentals between the costing-based COPA and margin analysis. So you get some kind of glimpse on where we are heading. So you get an idea of all these slides, I'm putting all the foundation for you so you'll understand when we get to the attributed profitability segment. So let's compare these two tools available within SAP. So on the left, you see costing-based COPA, on the right, margin analysis, also account-based COPA. Those who are using costing-based COPA, one of the nightmares is reconciliation with financial accounting, which is GL. So you have value fields used in costing-based COPA, and because of the timing between the document, let's say cost of goods sold post versus your billing document post, costs doesn't get updated with COPA in costing-based COPA. So that's one of the challenge all along, always reconciling because of the timing. Let's say you post cost of goods sold, your delivery happens this month, and then the billing happens next month. The COPA is not captured in the costing-based COPA. So you have to wait till that billing needs to happen, then you do a reconciliation. So there are workarounds you come with costing-based COPA. So all these workarounds were done in the past. With margin analysis, you don't need to do that anymore. It's all reconciles by design. All the cost and revenue is reconciled 100% with income statement item. So likewise, you see in costing-based COPA, you'll see a separate document when you post a document. In margin analysis, you will not see a separate document. It's already persisted with your income statement items and posted to the Universal Journal. So that's a big key difference. And there are very analytical reports that works with Universal Journal, ACDOCA, you can also leverage for margin analysis. Whereas in costing-based COPA, you use the legacy KE30, KE24 reports. You have to build that reports for your unique needs. And then the real-time derivation is something not available in costing-based COPA. So what this means is you have to wait till end of the month to look at the results of your characteristics or dimensions. Whereas in S4 with margin analysis, you can do a continuous accounting. What does it mean, continuous accounting? You get real-time insights throughout the month. Let's say I'm in the middle of the month. I want to look at my what my sales figures are. What is my sales by product group or customer group or profit center group? I can do all that throughout the month. That is the continuous accounting, or in other words, called soft close. Then you can see the classic table, CE star with costing-based COPA. With margin analysis, it is fully integrated with Universal Journal. Again, the costing-based COPA is not supported in cloud version, and that's one of the biggest drawback with costing-based COPA. All the innovations happens with margin analysis around use ACDOCA, Universal Journal. So that's one of the takeaway from this session, right? Anyone who is planning to implement COPA, I have seen several customers in my experience, they never use COPA. I mean, for them, my suggestion is to enable margin analysis directly. You can accomplish pretty much almost everything what you get from costing-based COPA. So that's the recommendation from this slide. We'll come back to this discussion again later point, but I would like to move on to the next slide. You may have seen this diagram several times in other sessions or in some SAP help documentation or in seminars. There's nothing new here, but I do want to highlight in regards to how this Universal Journal or ACDOCP for planning table integrates with margin analysis. So Universal Journal, those who are not familiar, those who are coming from ECC world, it's a huge one single source of truth table. It combines all modules such as your financial accounting, profitability analysis, your material ledger, asset accounting, any coding block. Coding block is customer fields that you add to the Universal Journal. All of them are housed in one big table. And then you can combine, the beauty of this universal table is you can combine management accounting and financial accounting with all the information available directly on the documents posted in S4. And then there is a real-time insights, how you accomplish, since you have everything in one place. You can also derive at real time, so you can accomplish real-time analysis and also do the margins. And then you have this embedded analytics, all right? Since everything is in one table, it's easy to do multi-dimensional reporting on the same record. So you on the same line, you have management accounting related data. You also have financial accounting data. So like currencies, for example, you have 3 currencies and 8 freely and definable currencies, along with your management accounting related documents posting like controlling area, cost elements, all the amounts. You can get everything in one single view. So you could do easily an embedded analytics reporting. So that's the beauty of Universal Journal that comes with S4 that very well integrates with COPA. So I may be using COPA and margin analysis interchangeably, but keep in mind margin analysis is the new word, new terminology to be used in S4 going forward, which is much more robust than account-based COPA. It has more features and it is continuing to evolve with new features. All right, so I would like to lay out some foundational things here. understanding real versus statistical. This is very key for attributed profitability segment functionality. So you in this same thing in ECC as well. Cost centers usually are true account assignment objects, but cost centers there is other true account assignment assigned along with cost center, then cost center becomes a statistical element in the. And you have internal orders and WBSS has a statistical flag also in the master record, but they're totally a true account assignment object. And then what is this profitability segment, PS seg? You can see in FB50, if you post a document, you'll see an arrow mark with PS seg. So PS seg is nothing but it's a combination of characteristics and dimensions grouped together. You call it as PS segment. It will act as a real account assignment. There are different account assignment types that you would see in SAP, like OR, OP for order sales orders. You have KS for cost centers, activity type, KL, you have VB, PR, all these account assignment types. How you determine whether it is a true account assignment object or statistical, right? So the definition of account, the statistical versus true account assignment object is you allocate values to the other account assignment objects with the true account assignment object that you assigned in the posting. Whereas with statistical, you cannot do that. You cannot do top-down distribution, you cannot do reallocate. That's one of the differences between true account assignment object and statistical objects. And in other words, when you assign true object, you are asking question, who is owning this cost? If I post some value on a document, you are assigning a true account assignment object, for example, order, right? Internal order, let's take classic example. You are merely asking who is going to own this responsibility of paying this cost, right? That's what the account assignment means. And then when it comes to the statistical, it is mainly reporting purpose only. It doesn't do anything other than that. And in ERP world, how you determine the true account assignment versus statistical, there's a value type in the COEP table. 4 is true account assignment, 11 is statistical. When it comes to S4, it works slightly different. There are two fields, ACCAS and ACCASTY, that determines whether the object is true or statistical in nature. So I want to lay out this fundamental. I think this is very, very important concept you need to understand because that helps for the attributed profitability segment. So let's go to the next. Okay. You all know that we post expenses or revenues to the cost objects, such as internal orders and WBSs. And then the month end, you run the settlement to these cost objects. And then when you run the settlement, then the COPA gets posted at the month end. Likewise, on the product costing side, you collect overhead cost through the production orders and cost centers and so on and so forth. Then you do allocations of the month end. So the allocations you run, and then that allocations will do a settlement to post to COPA. So this is a traditional approach, right? And you can see on the two screenshots I have added, the true account assignment, this truly reflects ACCASTY EO equal to EO. That means you are assigning, I'm going to show it in the system, bear with me, but just get that fundamental concept. The true account assignment to profitability segment, when I say ACCASTY equal to EO, that means the profitability segment acts as a true account assignment object. And on the right side, you can see I posted a document with internal order, and then my ACCASTY not equal to EO. It has some other value. It has OR. So this is how I tell the true account, how I identify true account assignment object within S4. Like in ECC world, you have 04, 11. In S4, you have these two fields, account assignment object, and then object type that determines true account assignment object. Okay. Now, question to the audience. we'll get to the core content of this session. What is attributed profitability segment? How many of you are using this feature in your company? Can you raise your hand? I can see, get a feeling of, see if people are knowledgeable in this session. Click on the hand sign so I can get a count. I'll give 20 seconds. Okay, see few people, not many. Great. Okay, thank you. Moving on. Okay, what is attributed profitability segment? It's a new optional feature. Keep in mind, this is an optional feature. It's not a mandatory required, but it's an optional feature. And the true account assignment object is still required for a CO object. But attributed profitability attributes is optional feature. So we derive characteristics and post these characteristics on the income statement items throughout the month whenever required. So what this means, based on the best guess principle, at a given time, at a point of time, whatever is available at a given time, I take that information and I'll post it to the universal journal. So like I was saying before, you don't have to wait to see the COPA values till month-end close happens with allocations and settlements. You can get to see all this information ahead of time throughout the month. So how the statistics are determined, it's determined by the income statement items that are posted to the universal journal. Derivation rule or settlement rule, I'm going to show you both, and you can get to see the postings. The profitability characteristics can be for both P&L and some balance sheet accounts. I'll explain this in the system in a second. And then the two fields I was referring, account assignment and object type, that determines whether it's an attributed profitability segment. Thereby, you can achieve real-time reporting with real-time derivation to accomplish continuous accounting. So that's in a nutshell what is attributed profitability segment is. Let's deep dive into some screens. We'll look at this in the system in a minute, but I want to give you a flavor of what it looks like on the universal journal. So during posting, the system, you assign characteristics or dimensions to the derivation rules in the PA segment, in the case of WBS. The system checks if there is any characteristics exist along with your true account assignment object. If it exists, then during posting, it takes that value and persists with income statement item and posts to the universal journal. So that's the whole idea. You can see on the top of the screen, you have WBS as an example. I posted a couple of characteristics, product line and product type. And then the true account assignment object in this case is WBS. You could see that object type OTY PR. On the bottom of the screen, you see the attributed profitability segment on the left, destination country that has been derived. And then the true account assignment object in this case is a cost center. You see with the KS on the object type. Okay, let's understand some key differences, attributed profitability segment and true account assignment objects. Okay, which object types can I do with attributed profitability segment? So the list here highlighted, and then I have provided some notes close to the end of this deck. You could reference there. So primarily, these are the supported object types: cost center, internal order, project, sales order, production order, service, and maintenance. And other object types like activity type, or if you have business process, if you're using activity-based costing, it's not in this list. Eventually, SAP may enable all that, but at this point, These are the only supported objects. And then on the right, you see the true profitability segment that combines characteristics. Typically, this is sent from the sender application. Like for example, a logistic sales order. The sender system will determine the true account assignment object to the PS side. And then you can, on the attributed account assignment profitability segment, you could use all the ACDOCA reports, like such as Fury reports, display line item reports, will display all the characteristics. And on the true account assignment objects, you still have ACDOCA and KE24 and KE30 reports. If you have, if you're not using this feature, and then primary cost, secondary cost, and some balance sheets are supported, whereas no balance sheets support for the true account assignment object. You know, in the classic poll, when we talk about revenue and secondary object, only relevance to the P&L line items. And then you get real-time insights with attributed profitability segment anytime during the month. With the true account assignment object, you have to wait till end of the month. And then characteristics are automatically determined based on the postings at the time of given duration in the period. And then profitability segment is determined from the sending application, like I mentioned earlier. So these are the key differences you might want to know. Okay, this slide, I took it from SAP Help. There is a derivation steps available for different objects, WBS, cost center, and order. I picked WBS for your reference, and you could refer to SAP Help. I have provided the link close to the slide. Let's look at quickly 2 layers. I'm not going to go through all these different steps involved. So what the system does is when you post a document, it checks, see if there's a, first of all, it checks the config, see if attributed profitability segment is enabled. If it is enabled, then it checks whether there is a settlement rule exists for the profitability segment in the WBS element. If it exists, then it reads the characteristics and then it persists to the income statement account and posts to the document. If it doesn't exist, then it goes to the next higher level WBS and then checks the same condition in the higher level WBS. If it exists on that WBS, then it gets the characteristics from that WBS and then it posts the document. If it doesn't exist, then it goes higher level, looks at the sales order item, and then the logic goes on for further levels. One thing I want to highlight here is the key to successful implementation of the attributed profitability segment is identifying the use cases. Not all companies may require this feature. It all varies by requirements at a given time for that company. We have to look at closely what needs to be done for that situation. So the true account assignment object, that concept is very crucial. That's one of the reasons I brought up this layer so you can see how the system does. It's a wonderful flow diagram to understand the derivation rules. Okay, how do I activate attributed profitability segment? So you activate profitability segment through customizing. There is a menu path here I have given on the left and the transaction KE80TR. And then you look at different cost objects in WBS, cost center, sales order. So you can independently activate based on the requirement. So once you activate it, then the attributed profitability segment is available. You can get the attributes and post to the document. This is the only configuration required for you to perform this functionality. Besides COPA, other like derivation rules and setting up operating concerns. Besides that, these are the only config you need for attributed profitability segment. I'll walk you through this in the system. Bear with me. Okay, so this is the time I would like to switch to the demo portion. So the demo portion consists of two things. I'm going to walk you through two scenarios. The scenario one, I'll show you a WBS where the WBS is set up. It's not built yet, but we want to post the document and look at the characteristics. And likewise, we can also look at cost center situation scenario 2. And we'll look at real-time derivation of market segment, how a derivation is working for attributes. So with that, let me switch to SAP. Okay, what you see is the SAP screen. Here, IMG screen. I already navigated to the Attributed Profitability Segment section. Everything is still remains same. How you define your structure, how you define operating concern, how you create characteristics, KEFI, how you define, do the derivation rules. Still same. Like we are, remember in the slide I was mentioning, we are still using the same derivation tool, the derivation strategy and derivation tool to accomplish this feature. So this activate derivation of attributes, this activity you need to perform. So you can see here, there are different objects available for to perform the attributed profitability segment. I can do cost centers. You can do by cost center category. Let's say not all cost centers could be eligible for this functionality. You can come up with your own categories and only enable by specific categories. And then you can see only P&L here. And if I go to internal orders, I could see here, you can do it by order type. You can enable it by specific order type so that you don't need to do it for entire system. And then the projects, here you could do by P&L accounts and balance sheet account. And then the sales order, and then the production order, maintenance order, and the list goes on. So in this demo, we look at products, especially the projects and the cost center posting. I want to walk you through. So with that, let me share my screen. Okay, let's go back. Let's start with a simple project. So I have a project here, simply set up with just one level for our demo purpose. And this project, if you see, it has only account assignment element. And then there is no billing element. For the demo purpose, I kept it simple. So if I go to the PA segment, one second. Oh, switched. My mouse is behaving a bit strange. Give me 1 second. Okay. All right. So you could see here, I have, in our example, we have two characteristics being maintained, product line and product type. And these characteristics will be posted to the universal journal when the document gets updated, when it finds it. So this WBS, now let me go back to the universal journal. for the WBS. I'm looking at Universal Journal right now, and I want to show you. So this is the same screen you have watched on the PowerPoint deck, and you could see here the true account assignment object. Here is PR, that's projects, and then account assignment, you have the WBS. And then you also have a profitability segment. You can see here, this part, the first three fields, is attributed profitability segment that I derived during the posting. All right, so with that, I would like to switch to the cost centers, quickly show you. So those who are familiar with, I have a derivation rule here for country. You can see here, I'm deriving the country derivation for the cost center that I have. If I look at that cost center quickly, so this cost center has a country CA, a destination country. That is what I call in the COPA. Then when I go back to then for the cost. Okay, so if you look at here, let me pick the layout. So here, I posted another document using cost center, and then I had a derivation rule to derive the destination country. You saw that in the derivation rule. So at the time of posting, the system took that derivation rule, it executed the derivation rule, grabbed that destination country as part of COPA derivation, and then it posted with this PA segment, a part of the Universal Journal. So you can see the true account assignment object is still KS here. KS and account assignment object. Right? And then if I want to show one other document. So if I look at another document 608 here, this is a manual document I posted. So you can see here, I don't have any account assignment objects. Nothing in here, cost center, no WBS or order, but I have derived profit center here, right? I have used the profit center, right? If I want to look at how this entry would look, let me go back Universal Journal again, look at doesn't matter, I'll pick some layout. Here, if you see that this is true account assignment object where you have an object type as EO. So that means this is derived from profitability segment. Right, so that ends the demo part. Now let me switch to the slides back. All right. Okay, what are the limitations of attributed profitability segment? One of the biggest disadvantages, you cannot do a split on the characteristics. Let's say I have an amount $1,000. I want to split this to two different characteristics, 50 or 60 to 40%. The system wouldn't allow. You can see from the screenshot what I'm meaning. You cannot do a split of settlement rule. This is one of the limitation, and it's highlighted in the SAP note 2439201. You can review that note. And the reason simply is because of document splitting, right? The system cannot handle when it splits. It needs to figure out all the characteristics that needs to be done when you do the such split. So simply the system will ignore this rule. Even if you have a rule like this, system won't simply ignores it. It doesn't work. And again, attributed profitability segment is only for reporting. It's versus real account objects. And then you cannot further allocate attributed profitability segment, or you cannot do a top-down distribution. But I think that makes sense, right? Because attributed profitability segment is all about statistical. And then you cannot use this K30 and K24 reports, the traditional reports. And it's only in the financial accounting reports, especially on the Universal Journal, you could use those reports to look at the characteristics. Some of these limitations might pose a challenge with implementing this feature. So what are the key takeaways from this session so far, what we have gone through? One of the biggest advantage is soft close. So you can do a continuous accounting throughout the month. Let's say I'll give an example. You want to accomplish your sales target. You are in the middle of the month. You want your sales team to achieve a certain percentage. So you can set the goals. You can run this attributed profitability segment, get the results, and then you can direct your team to or realign your strategy either to increase the resources and refine your resource strategy to get the desired results you need for the month end. So you don't need to wait till month end. Like that 2 weeks could be for some industry, some companies, like where volume and especially where the sales are key for first 15 days or later 15 days. That's very important. So this tool will help in those situations. It gives a better visibility by providing the real-time reporting at any time during the month. The examples I gave, like especially in the billing situations, this could be a very potential valuable tool. And there are service, so for example, you do billing by service orders, and or you want to capture, you want to look at your cost in the middle of the month to a cost center. You want to adjust your strategy on how you spend your money. That could be one of the advantage of using this tool. One disadvantage, I wouldn't say disadvantage, one caveat I want to add is, as you know, that we cannot do a further settlement on the attributed profitability segment. You cannot do top-down distribution. You cannot do allocations. So you have to carefully identify the use cases where this could be potentially used in your businesses. Like I was showing in this example, in the configuration, system provides a lot of flexibility. Let's say you are using internal orders. You can use the attributed profitability segment only for certain order types, or you can create a specific Z order type and then enable this functionality only for that order type, where you can take advantage of this feature. Likewise, you can do the same thing for cost center, where you can certain cost center categories only has this feature enabled. One thing I want to also highlight, if you expect the characteristics change drastically or significantly at the month period end, this tool is not recommended, because then you have to do a reclass of all the entries that you posted to get to the right results. You still have to run the period end activity, even if you are using this feature. But there could be some, if you think that characteristics doesn't change throughout the month, even if you post in the middle of the month, this could be a great tool. You can take advantage of the tool. But if you expect a lot of changes in the characteristics and there's a lot of work to reclass and reverse that type of activities, the tool is not ideal in those situations. but I'm sure every company may have some kind of use case that has to be closely analyzed and identified and map this role with that requirement. Okay, what are the resources here? I highlighted some key notes. The first note is an excellent note that provides the derivation logic and some good question and answer type of frequently asked questions. You could read that through. It provides a lot of information. And then fundamentally, you need to understand the profitability analysis itself in S4, how S4 is changing the margin analysis tool within S4. So that note also I highlighted here. So you might want to read that note. That's very helpful information. And then there are other notes related to like enabling the service and maintenance orders. You could look at that note. If you are at a version that's not supported, you might want to implement and look at the features. And then I also wrote a blog on ERP Corp, and you might want to read that. You might get additional insight. There are some good questions posted. You might read that. And then lastly, this SAP help. This link I have provided where you saw that process flows, how the system determines a real account assignment object, and that flow diagram. This link will take you to that flow diagram. But keep in mind, in the same help, you can navigate to the other flow diagrams for cost centers and internal orders. SAP has done a great job in explaining this in the flow diagrams. I strongly suggest if you are trying to use this feature, read through that, get the insights you needed so that you get better understanding of this feature in COPA. Right, I think that's my last slide, I believe. Let me see. Okay, so I have given my email ID here. And you can reach me out for any questions you may have specific to this topic. I can look at any specific questions. If I cannot cover, we have about 8 minutes. We'll see which, if there are any questions I could take. Beyond that, we may have to reach out to email and follow up. And Jessica, back to you. And thanks everyone for attending the call.
Thank you so much, Anand. So we will get on a couple of the questions. We don't have much time. I do want to end right on time. So the first question is, how does this real-time COPA process interact with month-end results analysis on cost objects when revenue or costs need to be deferred to the balance sheet?
So this would go with the revenue deferred to the balance sheet on the result analysis key probably you'll be using. I'm guessing based on the question. There is, so again, this is for the income statement items that you persist, right? Anything you defer to the balance sheet needs to be done through reallocation of the revenue. And you have a result analysis that does that, where you can run the settlement. Will take you to, if you have attributes maintained, it will take that characteristics and it will post to the balance sheet line. I mean, this is an excellent question, and I think it's loaded with a lot of information here. I will definitely research it further more on this one, and I'll get back to you.
And as a reminder, we will have these questions with the answers posted on our website next week. So please keep an eye out for that. The next question is cost object controlling going away in HANA?
Cost object controlling is not going away in HANA. That's product costing area. That's the core for manufacturing accounting, right? It's not going away.
Are characteristics and dimensions used interchangeably, or is there a difference?
That's a good question. So you know that in SAP uses interchangeably characteristics and dimensions. If you see the configuration, characteristics word being used, whereas if you see all the theory reports and analytical reports, the system uses dimensions. Ideally, the dimensions is the way to go forward. I mean, that's a new terminology SAP uses. And eventually, we will be using dimensions more than characteristics. But again, the difference, I mean, it's used interchangeably between the characteristics and the dimensions. But I see in a lot of documentation, especially dimensions and characteristics are interchangeably used, but more on Fiori and CDS views, that type of reporting, we use dimensions rather than characteristics.
Last question. Can you give a specific example of the best guess principle and how it may be refined at the month end?
Yeah, that's also a great question. So the best guess principle is, I'm in the middle of the month. I posted my sales with certain targets. I could change that characteristics. I can refine my characteristics and reallocate resources. And then month end, I can post additional dimensions or characteristics so that the data is refined further. So you can see before first 15 days what I posted, and then the later 15 days what I posted in the month. So you can see the differences, how I accomplished. I can refine further since I didn't accomplish my goals in the first 15 days. So this is quite relevant for like especially in the billing type of situations where you could do the billing for service-based billing or some kind of the order billing or service billing. You could do both.
That's all the time that we have today. Thank you again, everybody, for attending the November session. We will see you guys again next year. And thank you so much for this presentation and joining us for the November webcast. Everybody have a great day.
All right. Thanks, everyone. Have a nice day. Bye.